Volatility is a key word. I think we're going to see more volatility in these markets, all markets, including the metals. We had silver's really first day of opening up over 6%, almost 7%, which I think that's the biggest one-day move in about 3 years for silver. So obviously silver moves both up and down. I think we're going to see a positive trend for the gold and silver markets continue for 2012. But I think it may take a little bit longer than a lot of the precious metals bugs think for us to get into new nominal highs. So specifically for gold to get above the $1,900 level and silver to go march all the way back up into the $48 level. I think it's going to take some time. I think it will be achieved this year.
Well, you know, the fundamentals, though, seem to be fairly firm in place, that investors around the world have little confidence in the abilities of these governments to climb out of debt and really operate at a much higher and more efficient level in the economies, and so therefore they're running for safety. Has anything changed as we moved into a new annum?
No, Gary, you said it very eloquently. There's nothing out there that's doing anything other than make a stronger fundamental case for precious metals investing. Every proposal, everything that's in the mainstream is basically not going to work, and it actually adds to the problem. And most people that understand that are looking for safe harbor, looking for protection, looking for wealth preservation. So fundamentally, the metals have never looked better.
One of your key statements at silver-investor.com, check it out now. If you're even thinking about getting into this space, money, metals, and mining couldn't go to a better place to do some of your due diligence. And while you're there, consider signing up for some of his products there, the basic memberships, etc. But you say what investors really don't realize is that gold, of course, is a great way to preserve wealth, but it's really silver that could actually make you rich. Please explain that.
Well, I've said from the beginning, beating the early 2000s, that silver would outperform gold. And if you look at over the last decade, one of the number one investments over that 10-year time frame was silver. Oil was second. I think gold was third. Silver's more volatile. It moves up and down in larger percentages than gold does. But the main long-term trend, silver is better than gold so far. And that's my prediction. At the beginning of the bull market for silver, the ratio was 80 to 1. Now we're in about the mid-50s. We've been as low as the mid-30s. I think by the time this bull market is over, you may see back what I call the classic of the monetary ratio, which is about 15 to 1, or we could even go to the natural ratio, which is how it's dispersed in the Earth's surface, which is roughly at this point in time about 10 to 1. So if that's true, and again, is it true or is it false? We don't know. We don't know the future. But if it is true, then silver would outperform gold significantly from here, because the ratio would drop again from 50 to 1 to 10 to 1. In other words, a performance of about a factor of 5. That, I do believe, can happen. I believe it will happen, but it's going to be something that isn't going to happen this year. But I do believe it will happen by the time this bull market is, reaches its apex.
Speaking about this year, one of the big features is it is an election year. How does this tend, or does it affect what goes on in your markets?
As far as I'm concerned, it's like changing captains on the Titanic. At this point, it doesn't make any difference whatsoever.
You should have a deck chair with a little bit of inflatable hooked onto it, is what you're saying.
You got it.
Okay, well, you're also predicting, and you're still predicting, hyperinflation will rock the country in the coming months. Why? And then what happens when that goes down, if it goes down?
Well, let me be strict. I don't see a hyperinflation as most people understand it, like the Weimar Republic or Zimbabwe. All we need is enough inflation that will cause massive problems throughout the general economy of the United States. As a quick example, if the United States citizenry had to pay the world price of gasoline, in other words, if it moved up to what the Canadians pay and the Europeans pay, that alone would probably be devastating to the economy. And that's certainly not hyperinflation, but it's enough inflation to cause a great deal of problems in this country. So that's how I see it, Gary. I want to be strict on that. With advanced capital markets like we have and the bond market structure that we have, it's sort of a self-regulating mechanism, meaning that as people get more and more scared to hold the currency and start dumping it in the form of savings, which is primarily the bond market, interest rates are forced up and bond prices are forced down. Bond prices coming down are deflationary. So you've got these two forces working simultaneously. You have a fear of the currency moving out of it, interest rates go up, but on the regulating side of things, bond prices come down, which again takes money out of the system, or at least value out of the system. So I do think we're going to mess. I don't see any real clear way out of it. Certainly what's being proposed by the powers that be is nothing that's going to really help the situation. And that, therefore, again, I think the precious metals on an individual, corporate entity, even the nation state. Look at, China's buying more gold. Some of these individual nations are buying more gold. Venezuela asked for their physical gold to come back into the country. I mean, things are getting accelerated here as far as, what's real and what isn't.
When we talk about gold, and that's where a lot of the focus is because just of the sheer run-up, but you say a matter of supply and demand that silver is still the best money metal to have. Explain that.
Well, it's a smaller market, so therefore it moves, again, more both directions, up and down. But since it is a smaller market, and the next leg up, whenever that happens, I believe it'll begin this year, what you're going to see is gold continue up in price. And at some point, I think we may have seen that already, we don't know yet, most new investors or people who want to add to their position say, $2,000 gold is just too high for me, but silver's only at $50. I can get a lot more of it. I'm going to buy silver. And you'll see more and more thinking like that as these markets progress in time and in price. And because of that fact, you're going to see a lot of people coming in. Well, silver's so small a market that it doesn't take a lot of people thinking that way to really move the market significantly higher, and that's what I think will take place.
I see this ratio that you think is silver trades at a ratio of 1/16 to 1/10 of the price of gold at the top of this bull market. Let's say, for instance, for argument's sake, he got $2,000 gold. So you're saying we could have up to $200 an ounce silver, honestly?
Well, I'm on record as saying we'd see $100 an ounce silver, and that's in my book that was published in the early 2000s. So I can't get out of that. That's in black and white. That's as far as I'll go for a number, but it's not a number that I think people should focus on. And, of course, people love to know what number, how high, and all that, because that's how everyone thinks. My net worth is how many dollars do I own. But really, you got to get out of that paradigm, because in a depreciating currency, to think of how much you have in dollars is really not thinking very clearly. Because which dollar are you talking about? The 1913 dollar, the dollar of the day you were born, or the dollar of today? Because it's a variable, it's not a constant. Whereas an ounce of silver, an ounce of gold is a constant. And what you need to think about really is how many ounces of gold have I accumulated over the year or over the years. Is it higher, or is it a larger amount than I had a year ago, 2 years ago, 3 years ago? If you think of that shift, that paradigm, where you're looking at your real wealth, not some paper derivative, I think you actually come to the conclusion that it's not that big a deal to focus on the price. It's more important to focus on how much value have I retained, how much purchasing power do I have, how much wealth have I accumulated, how much savings do I have.
We have a company, Andover Mining Corp., AOVTF, Precious and Base Metal Exploration and Development Company, holdings in Utah and in the Ambler Mining District in Alaska. And this junior miner may have $7 billion in resources across the polymetallic clay, which is not even close to representative of what its stock price are. I'm wondering what your thoughts are as a proxy for just outright bullion purchase, these mining issues.
Because the metal started at the price they did, meaning about $250 for gold and under $5 for silver, a lot of people now are waking up to the fact that gold and silver investing is probably one of the best places they could have been in. If you want to catch the people that bought the metal at those low levels, we really want to look at the mining shares, because the mining shares are very much representative of leverage in the sector and are totally undervalued relative to what the metals are right now. We have most of these mining companies selling at values when gold was significantly lower than it is now and silver significantly lower than it is now. So the best play, and I still advocate you buy real metal first, but if you want to go on beyond there and catch up and get the big, massive gains that people that bought silver at $5 and gold at $250 have achieved already, I think you really should look into the mining shares.
Well, absolutely. And to make your point, the Andover Mining Corporation, even if gold, let's say, cut in half to around $800 an ounce, they could still take gold out of the ground at the current cost and still have a 68% increase as far as return to a share.
Right. I mean, it's a different business. You're pulling gold out of the ground and you're producing, an asset that's wanted at any price. And as long as the costs that you have for achieving that are less than what the cost of the asset is, in other words, you got a profit on your bottom line, then you are going to do well. Of course, obviously, share prices reflect not only the movement in the price of gold, but also other factors. But what you're saying, and let me just restate it, is that, you look at the business concern, and if you're making a profit now, especially with gold prices where they are, and the profits are so juicy, the share prices are not reflecting that truth. That means you're looking at something that you really, as an investor, ought to take to heart and say, look, this is something I can get into, and it's undervalued at this point in time.
Absolutely. Now, you talk about silver, being much more rare generally and how much is taken out of the ground every year than gold. But as far as the technology and the usage of silver, it's a precious metal, sure, but certainly has much more widespread application. And the demand, as far as when you look ahead, you talk about purity issues and, everything that we need, silver seems to be, it's got a kind of a silver lining to it.
Yeah. Well, let me just restate something you said. I mean, silver's taken out of the ground at about 8 times as much per year as gold. So it's not scarcer in the ground. There's about 8 to 10 times more silver in the ground than there is gold.
Oh, okay.
So, but as far as what's left over every year, almost all gold is taken out and put into the pile and saved either as, gold bars or gold jewelry. So all of it, for practical purposes, is available for investment. Whereas silver, on the other hand, a good 54%, so more than half, basically is gone in most applications. So it basically disappears in the landfills or whatever. So the amount of investable silver above ground is actually less. To put it in succinct terms, you've got about a 6-month supply of silver above ground. You've got about a 40-year supply of gold above ground.
Excellent. Okay, so we've talked about mining. We've talked about metals. What about the money aspect? Any thoughts there, currency-wise?
Several, and it's one of my favorite topics because it's probably one of the most, if not the most, controversial about the silver market. Even within the gold camp, you have many that'll say, silver's only an industrial metal, it's not money. But really, the facts are what they are, and these are not because I'm biased towards silver, which I am, but it's also provable. I mean, if you go to the Torah and you look at the word for money, it's silver, it's not gold. In the Jewish Bible, everything to do with money is silver. If you look at the Chinese language, the character is a building housing silver bars, not gold bars. The fact is, very simply, that silver has been money more often, used in more places, and in much greater quantities for money than gold ever has. Now, I'm not saying gold isn't money. I agree with J.P. Morgan. Gold is money, that's it, okay? But silver is also money, has been much more used as money throughout history than silver. But it's this North American mindset that only gold is money that is pervasive throughout probably 6-7% of the world's population, whereas the rest of the world's population really understands that silver is a monetary asset every bit as much as gold is.
Absolutely. And, of course, the valuation of silver is much less, and so therefore for more of the population of the world, it's easier to hold. Getting back to what David believes, that silver is the best money metal to have, and supply and demand. David pointed out 7 to 8 times more silver mined each year than gold, but you also say the dynamics have never been better because there's far less silver than gold really available. That's where I was kind of getting at. For every 3 ounces of investment-grade gold on the market, you say, only about 1 ounce of investment-grade silver.
Yeah, it depends on whose data you use, but that's conservative. Maybe more like 4 to 1, but you're right. That's the idea.
Okay, I got you. Any other final comments before we let you go? And it's always we always go to school when we got David Morgan, silver-investor.com on the line.
No, that's going to do it for today, Gary. Thank you very much.
All right. Have a good week, sir.